Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for Tuesday, the 29th of September, 2020. Well, tomorrow's the last trading day of the month, the last trading day, if you will, of the quarter. And that means dressing of windows, evening up going on, and of course the lion and the lamb. I don't know who's going to be what in tonight's debate, but something's going to be there. I doubt there are two lions going at each other. We're going to see the presidential debate, and I think a lot of us are watching that to try to figure out just where they both are going to come out and who looks which way. And, you know, there's still 6% of American voters undecided. That's enough to swing an election, so we'll see just what happens. But behind me, almost like Christmas, some red, some green, a little bit of everything. When we look at the tech sector, I continue to point out that this last gap got filled. Now, there is a small gap here between 2 days ago. If you take a look at the high right here, it's at 114.28, and the next day you have 114.87. So that one might decide to be on a correction filled. But as long as you don't get back under these numbers, looks pretty interesting in XLK because you have a pattern of higher lows and higher highs. On the swing line, that is bullish. In other words, if you talk to somebody and they say, what's an uptrend? It's generally higher lows, higher highs, downtrend, lower highs, lower lows. But they're not asking you about filters, such as where's it in relation to key moving averages? Is the market overbought, oversold? Where's the resistance or support? You got what I'm saying? So when I put in the resistance, the 18-day average of closes was it. You got up and played with it yesterday. Didn't do it today, but I would not be surprised that you don't slip back a little bit to fight at that number. When we take a look at the Bollinger Band, it's dropping like a stone on this market. So it's just been falling each day. If you take a look at it, here it was 122.40, 124.54, 122.49, about a $2 drop, 119. So it dropped another $2 plus $3 on that. You know, it's going to be right on top of the market is my point tomorrow. And that's a big resistance point. So be a bit cautious here. I'm not looking for the markets to go crazy tomorrow through those numbers. They could, but I'm not looking for it. In terms of momentum, it's up, but any reading over 70 is overbought. You're not there. So there's room to run a bit here if the market likes what it sees in a mixture of things. Certainly the debate is number one. We get ADP numbers coming out. Then we have jobs data at the end of the week. We've got the quarterly GDP coming out, the last one that's going to match up against the second quarter, all the prelims to see the numbers. And you know, there's a lot of people thinking our third quarter GDP when it's released is going to be high 20s, low 30 gain. So whatever you're looking at tomorrow, the trade's not going to pay much attention to that. They're thinking, what's the next one going to come out for this third quarter that we're just ending? When you look at SMH, you got up to your resistance point. The market stopped, boom, like that. I contend the first time you hit Bollinger Bands, the smart money, quote unquote, whatever that is, comes out of the market with part of their position, maybe a big chunk, and they're moving stops way up. Why do I think that? Because these black bands represent an algorithm called a Bollinger Band. 95% of the time the market's going to stay within the band. There are techniques that we've developed here to tell you when you get an embedded reading that you can ride the band and do something different. You're not doing that here. You're in an overbought market, your first challenge of it. Traditionally, what I will then say is that market's going to run into a wall, and it did at 175.50, closing 174.46. So a nice little drop from after hitting that. When we go to XLI, this is more what often happens when you hit that first time, the 18-day average. You stall as the market tries to figure out what to do. The market's not trending here. You have a lower low on the swing line with a higher high. You're back under the 18-day average, so the bias is down. When you're over it, the bias is up. And momentum, which was oversold, is now neutral and trying to go sideways. In XLE, it is still bearish in the energy sector. Now, yesterday, if we take a look, this market was flirting, and I had said, if it's going to keep its embedded reading, which it has, it's got to drop almost right away. Kaboom. They kept it. You're still targeting the 29-28 zone. Lose the red over 20, and I'll be the first one on the street saying, hey, I think we're going back to the 18-day average of closes. You haven't lost it. QQQ. I don't know why somebody wrote and said I skipped over QQQ. I don't think I did yesterday. It's on the charts at least. Higher lows, higher highs. Friendly. The market yesterday got up to this 18-day average. As you can see, it closed over it. So the bias is up. The bias is up here. But don't be surprised to see the market pull back and fight a little bit at that number. Once you're well under it, it's not uncommon to do that. But going home, and that's what you should care about. The bulls are in control. The swing line is up, the bias is up, momentum is up, and momentum is not overbought. When we come to EFA, the emerging markets, you ended the downtrend. I was very clear in saying that yesterday. This rally ended this pattern of lower highs, lower lows, plus. You got into main support areas. In fact, I personally think that the traders that believe that still longer term this market's good probably were buying those moving averages, and they just sit back and they go, I'm a longer term trader. I'm not worried if this market drops 10% or not. I think this is a good play. And because unlike futures markets, these ETFs don't expire, they have that. I'm not that kind of trader. I've made too many mistakes where I think it's good and the 10% loss becomes 20, 20 becomes 30, okay? That's not to say I haven't made bets that don't become 10% gain, 20% gain, and so on. It goes both ways. When we look at GLD, we have a pattern of lower highs, lower lows. We're getting a bounce in the market. Momentum is turned up, but there's pretty stiff resistance at 180.43. On the futures market, I was showing people today that the 1926 area looks to be the resistance in the December contract. The gold miners got the bounce right where I wanted it, held the combination of the 100-day and the lower Bollinger Band, giving you the bounce. But the key here is nothing's thrown out a buy signal in any of the metals. You might get, if you can get over 40.32, reasons to no longer play the short side for a bit. I think you already had that when you got to this number, and you're still oversold, so I don't see anybody coming back in that follows the techniques I have. Notice how the the interest rate sector is just drifting sideways. And as it's doing so, you're getting compressed like that on these Bollinger Bands. Volatility has come out of the market. You're overbought. The trend is up. You haven't gone to that upper band, but you might at 165.71. FXE has a lot of resistance at the 18-day average, but I can make an argument you lost your embedded reading, and this market should make a run at that. It would have to get annihilated when it reopens tomorrow in order not to. It'd have to fall sharp and get back into this gap that it's got. Otherwise, look for that 110.91 as a very strong possibility. The bigger trend is still down. It's oversold enough where I think the pros came out, and I think they'll be watching this market now because you left the overbought reading and you entered oversold territory. You know, I'm showing you a futures trading kit for a reason. I'm going to stop here in a moment when we get to where I want to be and show you the different chapters that we have. That's what I want you to see. Every one of these pertain to you as a SPDR ETF trader. While we talk history of the futures, it's neat to know it because when you're trading DIA, SPY, go on and on, you're really trading something that the underlying part that makes it up are the futures markets. Market overviews, 10 trading rules, they don't change. They're in granite. Chart patterns, know them. Then money management, your technical analysis, fundamental analysis, how to use options, be it on the futures, be it on the stocks, be it on SPDRs, ETFs, because there's ways you get into a certain area, might want to write calls, might want to write puts, different ways to do it. We explain it all in our futures trading kit. How do you get it? It's free. Go to our website, www.iraepstein.com. Look on the bottom right, free offers. Choose what you want, and you'll get it. I'm Ira. You have a good day. I will talk to you all tomorrow.